Good morning and welcome to the Perivis Brief, where we bring you the key corporate updates that matter in just a few minutes. Please note that this is AI-generated content and may contain factual inaccuracies. Always consult original data before making investment decisions. We'll take you through the key corporate news, but before that, a word from our technical analyst.
Here's a quick look at Friday's market action. Among the notable movers, nuclear software and IT gained 20%, while Paris defense and capital goods rose nearly 19%. IFC and REITs also posted double-digit gains. On the downside, Senores Pharma fell over 8%, with Paradeep Phosphates and Newland Labs also declining. At the sector level, capital goods led with an average gain of 1.9%. Supported by strong performances from Cochin Shipyard, Mazagon Dock, and Data Patterns. Electric utilities and construction also outperformed, each averaging just over 2% gains, with SJVN and Anant Raj among the top contributors. In contrast, healthcare providers and services underperformed, averaging a decline of nearly 0.5%, with global health among the laggards. The trading and broader healthcare sectors also finished below the market average. That's it from the price action desk. Now back to the main segment.
Now let's dive into today's key corporate news. Here's a summary of what we'll cover. Major earnings across manufacturing and consumer sectors. Key leadership changes and notable business developments, including expansions and acquisitions. Starting with earnings. In manufacturing and capital goods, Sterlite Technologies posted FY25 revenue of 3,996 crore rupees, with Q4 EBITDA at a six-quarter high and completed the demerger of its global services business. Kaynes Technology reported a 51% increase in revenue to about 2,700 crores and a 60% rise in PAT to 293 crore rupees. The order book stands at 6,597 crore rupees. PG Electroplast posted a 77% increase in revenue to over 4,800 crores and a 112% rise in PAT to 291 crores. The company announced a capex plan of 800 to 900 crores for FY26. Texmaco Rail posted a consolidated PAT of 248 crores, doubling from 113 crores in the previous year. The company announced an amalgamation and division transfer. In consumer and retail, Eureka Forbes reported FY25 revenue of about 2,400 crores, up 11.3% VOY, but PATA rose to 163 crores, up 78% on the back of continued operating margin improvement from 9% to 11%, and exceptional items that included insurance payouts for the fire incident in the previous year. Heritage Foods saw revenue rise 9%, but PAT up 77% on the back of improving operating margins from 5% to 8%. The company acquired a majority stake in Heritage Novandai Foods. Pondi, Oxides and Chemicals reported a 33% increase in revenue to 2,028 crores and a 65% rise in PAT to 65 crore rupees. SG Mart saw revenue rise 118% Yuan to over 5,800 crores, with PAT up 70% to 1,030 crores. The company announced a 600 crore rupees capital expenditure plan. In logistics, Delhivery achieved its first full-year PAT of 162 crores, with FY25 revenue up 10% to 8,932 crores. The company also announced the acquisition of Ecom Express. In line with the solid run across capital market players, MCX reported a 59% increase in income to about 1,200 crores. Other notables, Websol Energy reported full-year revenue of 575 crores and swung from loss to profit for the full year, on the back of solid demand for photovoltaic cells. SCI, Shipping Corporation of India, reported a consolidated PAT of 843 crores, up 32%, with operating margins moving back up to 31%. Now over to leadership and board updates. Eureka Forbes appointed Rakesh Moza as Chief Sales Officer and expanded Nithyanand Shankar's role as Chief Business Officer. Mrs. Bector's Food Specialities, CFO Arnav Jain and Madhasan Sumi Weering. CFO Mahender Chabra resigned. Major business developments. In other business updates, NBCC India incorporated a real estate subsidiary in Dubai. GMR Airports was granted the concession to operate the IGI Airport cargo terminal in New Delhi. Thomas Cook India opened its first EU office in Cyprus. SAMIL formed a joint venture with Sanko Japan for sustainable packaging. India Glycols approved the demerger of its biopharma and spirits and biofuel businesses into separate entities. That's it for today's Perivis Brief. If you found it useful, feel free to pass it along to someone who might too. See you tomorrow.